Hello and welcome to another Simple Trading Ideas trading tutorial. In this Simple Trading Ideas trading tutorial, we're going to pick up where we left off in our series of using indicators to make trading decisions. This is part 2. When we left off in part 1, we were looking at the QQQ ETF, and we had a 10 period or 10-day simple moving average on that particular chart. And we're looking at our objective being creating a simple trading system using that particular 10 period moving average. Okay? In its simplest form, a trading system consists of an entry as well as an exit. So we want to know when to get in and when to get out. Okay? Now, there's much more to a trading system than entries, just simple entries and simple exits, but we're keeping things very basic here to introduce the concept of creating a simple trading system. So, here are some of the components of a trading system. What to trade. We already know that we'll be trading the QQQ ETF, and it could be anything in any of these series. We'll be going through examples of futures and forex, stocks, those types of things. So how much to trade, and we'll see that in our very next section. We'll talk about how much to trade. How much to risk. Well, how much is risked in this particular case will be determined as to when we get out of a current trade based upon the moving average triggering a trade in the opposite direction. Okay, when to get in and when to get out, or entry and exit. Okay, so we like trading systems because they allow us to be consistent. They allow us to find something that's successful and duplicate it. And as anyone who's ever been successful in any endeavor, any person that you may have ever met who has been wealthy, they found something that works, and then they went on to duplicate that as many times as they possibly could. Okay, so in this case, we can look at a trading system as just a simple set of rules. Okay, so what we're going to do is we're going to create a couple of rules for entries and exits, and here they are. Okay, all right, so and the first rule is our buy entry rule. Okay, so if the close of the QQQ is greater than the 10 period simple moving average, then we'll buy 1,000 shares of the QQQ at the next open. Okay, that's very important. So what we've done is we've identified in our buy rule what to trade, the QQQ, how much to trade, 1,000 shares, how much to risk will be determined again by when we exit the buy trade and enter a sell trade. I just made an adjustment there to reflect that we're selling short in our second rule. Okay, back to when to get in, of course, is the entry, and the exit is triggered by an entry into the trade in the opposite direction. So for the sell short, it's if the close of the QQQ is less than the 10 period simple moving average, then sell short 1,000 shares of the QQQ at the next open. Okay, so what we're going to do is we're going to go to the chart and take a look at how this simple trading system might look in action. All right, here we are in our chart, and what we're going to do is we'll take a look again at, we'll grab a section here. Okay, we'll look around here, and we can see here that we have ourselves a close based upon our rule, that is above this 10-period moving average. Okay, so our rule says that we should buy here at the very next open. Okay, so that gives you, a trading signal ahead of time. Okay, and so if we go up here and take a look, we're still above that, still above that, still above that. Now here we have a close that is below this 10-period moving average. So it would seem logical that we would be selling right here based upon the rules, not upon the necessary direction of the chart or the moving average. Okay, so keep those in mind. And what I'm going to do now is I'm going to apply the very simple moving average system that I've programmed for this particular chart. Okay, let's pop back in here and take a look. Okay, we were looking at this particular bar, but we were already in a trade here. Okay, so we would have got long, then gotten short over here based upon that close underneath there. Then we have a close right here that's above the 10-period moving average, and we buy right there on the open. Okay, so you can see the directions, the durations of the trade with the little dotted blue lines. Minus means we were short 1,000 shares, and you can see short right there. Buy, the blue up arrow for being long or buying. And we rode up here. It's a nice uptrend. This is what you always like to see when you're using a trend indicator such as the moving average. And then down here we had our first close in a while that was below the 10-period moving average. So we sold short down here. Then the market moves up. We have a close above the 10-period moving average. Okay, and as a result, the open here at the tip of that arrow is where we buy 1,000 shares. So this particular type of a system is known as a stop and reverse system because the one trade will be closed out and the trade in the opposite direction will open up. Okay, so the long here gets closed out, so that long gets sold at that's a profit from here to here, and then at the very same time we sell short here to here. Okay, then that stops and reverses direction, stops, reverses direction. Okay, so as you can see here, it's a very nice looking profit in that particular direction. Okay, so we'll move forward a little bit, and you can see things get a little trickier. You see the number of trades increasing, right? So we're back here. Just one trade there, a few trades there, and that's the way it should look when the market's trending. Okay, and here you see as the market is basically going sideways, and when the market is moving sideways, it is known as congestion or consolidation or stagnancy or trendlessness, or any of the other number of terms used to describe a market that is essentially just kind of oscillating back and forth. You can see back here we jump back into a trend, and we end up here long and still currently long at this particular point. And so you can see visually long and short trades of this particular simple trading system. And we're going to get into more about the construction of trading systems. And remember something, this is just one particular financial instrument. Also to keep in mind, this is just one particular type of moving average. This is a 10-period simple moving average. And a moving average can be really of any length. And we'll see how that affects trades and other types of things. So at the outset, we don't know if this simple system that we've thrown up here is even profitable. But we'll get an opportunity to explore it and get a lot more into using indicators to make trading decisions, create trading systems, etc. in our next series. Thank you for taking the time to join us for another Simple Trading Ideas trading tutorial. Please feel free to come to our website at www.simpletradingideas.com for more great trading information. Thank you and have a phenomenal day.